Hello, this is Steve Malone Compass Effects. I hope you're doing well today and you're getting some good trades. Tonight we have a number of news announcements coming out of China. And these news announcements, the Consumer Price Index, the Product Price Index, retail sales, and industrial production, just to name a few, can have a direct impact on the dollar-yen. Now, some believe the dollar-yen will continue sliding on down, while others perceive the dollar-yen on a technical correction and a bounce back up. So let's take a look at the dollar-yen and give some reasons for the potential move up and some reasons for the potential slide on down. Now, taking a look at the dollar-yen here on a daily chart, we can see that we had a bit of a head and shoulders pattern. You can see a shoulder at the head, another shoulder here, and coming across here a neckline. And the market broke that neckline, starting to move a little bit to the downside. Now, it's sitting right here, came down and sat right here on this previous high point. We're going to have to see if we get a break of that. But how far down can this potentially go on the break of the neckline? If we take a measure move from the neckline up to the high point here, just about the average high point, and we take this and move it down from the break of the neckline, there's a possibility that we get all the way back down here into this range, which would put us down around the 76.80 level. However, I'm kind of doubtful that the Bank of Japan wants to see or would allow the yen to strengthen that much. Remember, Japan is an export country. That's how they bring most of their income into the Japanese economy, is via exports. If Japanese goods, because of a strengthening yen, if those goods get higher and higher in price, fewer goods are purchased worldwide. So a strong yen is not the best thing for the Japanese economy. I would think that the BOJ would like to see a weaker yen. So the likelihood of this coming on down like this might not take place. Now consider this. If we simply run a retracement from the low point up to the high point, we can see that we're sitting just right about the 50%. There's the possibility that the market pushes down to about the 79.10, 79.20 area, and then we'll have a 1, 2, 3 off the 618 push back up. Let's consider some other things related to the dollar-yen. Taking a look at the dollar-yen and adding a few more lines to it and considering some daily moving averages, we can see that the dollar-yen as of late has basically been back and forth between the 10-day moving average and the 21-day moving average. Also, it's been in between these two levels right here, 79.52, which was the high that we had back on October 31st, the last major intervention that the Bank of Japan did. Before that, the intervention was August the 4th, where the market moved up to this 80.22 area. Now, we have a situation where we have the 10-day below the 21-day. Usually when this happens, when the 10 days below the 21-day, we have a continuation to the downside foreseen. However, if you look down below here, we have the 200-day SMA sitting right down here with the 50 SMA on top. What this is telling me is we're getting into a consolidation pattern on the daily chart, a sideways move. However, the market has a tendency to favor an upward move when the 200-day SMA is below price. So my thinking is this: if the market comes down towards that 618 retracement, maybe even down as low as 78.50 level, depending upon the Chinese news tonight, we could see a bounce here and a move back up. Many market participants right now are looking for a potential correction in the dollar-yen. If nothing else, due to risk aversion. Right now the market has been moving into the dollar based upon fears in the marketplace, and we've kind of had this risk-off sentiment, and markets are moving out of riskier assets like equities and higher interest-bearing currencies like the Aussie and moving into the dollar. This is the case of causing the dollar to potentially be stronger than the yen, and we see a potential move up. Now, technically speaking, if you just simply take a look at this, some look at this as an Elliott wave situation where we have this move down, correction, another move down, possible correction, and then a third move down. Well, that would again bring us down to about that 200 SMA. So some key things to consider going into the Chinese news announcements this evening. there is the possibility that we break 79.50 and move down to about the 78.50 area and then bounce off the 200 SMA. On the flip side of that, has the market retraced enough, maybe coming down just a little bit towards that 618 that I just talked about, around that 79.20 area, and then we see the market take the bounce and push back towards the 21-day SMA. Now, some key points to consider here. If the market's going to make a move up and sustain a move up, it's going to have to get above this 81 level here. And then it's going to have to work its way above the 50 SMA to see it continue to move to the upside. So my thinking is here, once we get above the 81, by that time the 50 SMA might be trying to get right in that 81 area, a break of that, and a market holds that level or holds this area right in here, 81 to 81.50. If we hold that, then we push on up. Other than that, if the market falls down, we get more strength into the yen, then there's a likelihood of breaking the 78.25. If that happens, if we get a close below the 78.25, then we're back down into this range that we were in for the longest period of time, down around that 76 to 78 area, which wasn't a fun time for the BOJ. They tried a number of initiatives to weaken the yen, but it just didn't happen. So that's the situation on the dollar yen. I wouldn't be surprised though, given all the data coming out, if it's mixed bag, some good, some bad, we might literally see the dollar yen just simply bounce anywhere between 79.50 to 80.20 area right in here, or bounce between the 10-day SMA sitting right now at about 79.88 to the 21-day SMA sitting up there around the 80.50. So possibility of a mixed bag of news, the dollar yen just sits in this area. And there's one more aspect to consider based upon what we see in the charts, and that is what the Traders Dynamic Index is saying. If you take a look at it, you can see that the Traders Dynamic Index is showing a double bottom pattern here. So a double bottom, we're holding a floor, we have this lower lows here, but we have a little bit of higher lows happening right here. There's a potential for positive divergence here seen on the bigger picture. Now again, this situation would see the green line of the Traders Dynamic Index rise up, potentially break the market baseline, has a strong trend to the downside, so there's a potential break. If this does bounce up, we're going to see also in price action the challenge of the 21 SMA and the potential break. Well folks, it's Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.